Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial mysteries that even the sharpest accountants might stumble over. Today, we're diving into a report that smells like a company fighting to stay on the big leagues, so buckle up because this one's a bit of a nail biter. And before we dive in, if you enjoy getting these clear, no-nonsense breakdowns of complex financial documents, make sure you hit that subscribe button. Also, we have a fantastic Discord community linked in the description below where we discuss these filings further. Come on over and join the conversation. This is a Form 8K filing from Boxlight Corporation. Now, an 8K is a report of major events that a publicly traded company needs to disclose to the public. Think of it as a Company S way of saying, hey, something important just happened, and you need to know about it. And today, Boxlight is announcing they believe they've gotten their act together and are back in compliance with the rules for being listed on the Nasdaq stock market. So, what does it mean to regain compliance with Nasdaq listing standards? Well, Nasdaq has a bunch of rules that companies have to follow to stay listed on their exchange. It's like a club with requirements. One of the big ones is about having enough shareholder equity. Essentially, the company needs to have a certain amount of money in the bank or assets that belong to the shareholders to show they're a healthy enough business to be publicly traded on Nasdaq. Boxlight announced that after some recent business moves, they believe they now have at least $2.5 million in stockholders' equity. This is a pretty big deal because if they didn't meet this requirement, Nasdaq could kick them off the exchange. And being delisted is a really bad sign for investors, making it harder to buy or sell the company. S-stock and generally tanking its value. Now, this wasn't an easy fight for Boxlight back in April of this year. They actually received a notice from Nasdaq saying they weren't meeting this important equity rule. Nasdaq gave them a deadline to fix it, which was the 6th of October of this year. So they were on the clock to find a way to boost their equity. So how did they do it? They held an annual meeting of their shareholders in August and got approval to increase the number of shares they are allowed to issue. Think of it like a company getting permission to print more stock certificates. This was a necessary step for some of the other moves they made. Then, in late September, they announced they had successfully raised $4.0 million by selling more of their Class A common stock. Anytime a company can raise fresh money from investors, it is a positive sign, especially when they're trying to meet a minimum equity requirement. On top of that, some folks who had previously bought warrants, which are basically options to buy stock at a certain price, decided to exercise those warrants. This brought in another $1.9 million. So they were actively bringing in cash from multiple sources. And then the big move happened on the 3rd of October, the very day this report is dated. Boxlight made two key changes. First, they modified the terms of their Series B preferred stock. This is important because the original terms had some features that weren't entirely in the company, S-control, which forced them to classify that stock as temporary equity. By changing those terms, they can now classify it as permanent equity, which counts more favorably towards their total equity. Think of it like consolidating debt versus having it float around. Second, they arranged for holders of their Series C preferred stock to convert that stock into regular common stock. We saw they increased the number of authorized shares earlier, and that was precisely to make this conversion happen. When preferred stock converts to common stock, it increases the company's common equity. So, all these actions combined raising money from new stock sales and warrant exercises and reclassifying their preferred stock as permanent equity. That's what Boxlight believes has brought them up to that $2.5 million equity requirement. They are still waiting for Nasdaq to formally confirm this, but they are clearly optimistic. Now, it is not just about the money. Boxlight also mentioned they regained compliance with another Nasdaq rule, 5605B1. This rule is about the composition of the board of directors. It requires that a majority of the board members must be independent directors. Independent directors are people who don't have a significant financial stake or other relationships with the company that could create a conflict of interest. Having an independent board is crucial for good corporate governance, ensuring decisions are made with the best interests of all shareholders in mind. They did this by electing new directors. And as if that wasn't enough, they also recently regained compliance with yet another rule, 5605C2A. This one specifically relates to the audit committee of the board. It requires at least one member of the audit committee to have financial expertise. This means they need someone who really understands finance or accounting to oversee the company, financial reporting and internal controls. They specifically mentioned Corrine Clark. noting her experience as a chief executive officer of a mortgage lender, which they believe gives her the necessary financial sophistication. So, putting it all together, Boxlight is essentially saying, we've fixed our problems, we've got enough equity, our board is independent enough, and our audit committee has the right expertise. We should be good to go. They are reporting that they believe they are currently in compliance with all of Nasdaq's listing standards. Now, of course, anytime a company talks about what might happen in the future, we have to look at their forward-looking statements section. This is where they issue disclaimers. They are basically saying, we hope all this works out, but there are still risks. They acknowledge that Nasdaq's confirmation is pending, and even if they are compliant now, there is no guarantee they won't run into issues again. They specifically mention their history of non-compliance and the possibility of future non-compliance leading to delisting. This is a crucial reminder that while they've cleared some hurdles, the race isn't entirely over. Looking at this filing through a Warren Buffett lens, what does it tell us? Boxlight has been in a bit of a precarious position, flirting with delisting. Their strategy has clearly been focused on survival and meeting those technical listing requirements. They've used a combination of raising capital through stock and warrants, and cleverly restructuring their preferred stock to meet the equity threshold. The fact that they had to do these things tells us the underlying business might not be generating enough organic growth or profit to meet Nasdaq standards on its own. The good news is they've shown an ability to execute on a plan to regain compliance. The bad news is that the need for these measures, especially the increase in authorized shares and the capital raises, suggests that the company's organic financial health might still be a work in progress. They've effectively bought themselves more time and a spot on the exchange, but the long-term question remains, can they build a sustainable business that naturally meets these standards in the future? The risks mentioned in the forward-looking statements, particularly their history of non-compliance and the potential for future issues, are very real. So, Boxlight has survived another day, and they've managed to check off the boxes Nasdaq requires for now. The big question for investors is whether this is a sustainable turnaround or just a temporary reprieve. We'll be watching closely to see how they perform in their next filings, and if they can truly build a stronger financial foundation moving forward. Alright, that is our breakdown of Boxlight's latest filing. What's your take on these numbers and what they signal for the company's future? Were these moves smart or just a band? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description below. Thanks for watching, see you next time.